Good afternoon, everybody. How's it going today? So today is Wednesday, October the 27th. It's about 1 p.m. here in Istanbul, Turkey. And we're going to make a very in-depth video. And the title of it is going to be Buying the Panic Dip. And also figuring out which strategies work for you and actually sticking to them. So I'm going to keep this in a general format of just talking about the psychology, first of all, of being a successful trader. I think this strategy or this video is long overdue, and a lot of people are always trying to figure out who they are in the market, figuring out what strategies work for them, and a lot of people are spending tons of time figuring out indicators and finding out general strategies that work, and then all of a sudden you get a day like this where the market ends up dropping 20% on every single time frame, and then you're simply at a loss, right? What do we do in these specific situations? Personally, what I did was pretty much nothing at all. Okay, I am definitely a panic dip buyer, which is basically like catching a falling knife, but it doesn't work all the time, and it does take a lot of strategies and a lot of experience to be able to capitalize on these dips that happened. I'm sure that a lot of people, excuse me, ended up getting liquidated during this particular drop. And of course, that we're going to get into over leveraging as well, right? So the first off, to start off, the best thing and the best advice I can give to anybody in this market is, first of all, taking it very, very slow. We have to be able to take it very slow and understand that some weeks will be better than some weeks and some will be slower. Some months will be slower than others and some months will be better than others as well. And this is a gradual learning process that takes an immense amount of time. We also have to remember that it's a very competitive market, and with it being such a competitive market, we're going to be competing against people like me, right? If you compete against people like me, that's going to take a lot of effort, and it's the most competitive market in the world because every time you're losing something, there's a transfer of money from your loss to someone else's gain, and vice versa as well. When I'm losing, it's going to be transferred from my loss to your gain possibly as well. And I personally believe that not every single strategy will work for every single person because trading is a process of self-discovery. And because it's a process of self-discovery, we have to find out what really works for us. And through the process of trial and error, and especially losing is by far the best lesson that you can have. Although it can be expensive, we need to minimize these losses so we can learn what not to do as much as what to do as well. So personally myself, I entered with only a little position, $25,000 on DYDX. I ended up sorting it by the percentage change to see what dropped the most during this dip, and that's the one that I actually went for. I made only $2,000 on this dip, on this falling knife, and it was partially because I was still sleeping as well. I was still in bed. I picked up my phone. I saw the major dip. TradingView ended up going entirely red, which means that it's disconnected from the Binance server. The API is just completely smashed. So I wasn't able to get updates in real time, but I bought the dip, right? It wasn't too low, but catching a falling knife is also extremely dangerous. It's not something that you want to specialize in doing too much, but once you see it happen very often, you're able to capitalize on it using the 1 second, the 5 second, the 15-second charts as well. What I really need to emphasize once again is just taking it really, really slow. You can't compare yourself to other traders. You can't have these expectations of making a gigantic amount of money in a very short period of time because this is a gradual learning process which takes huge amounts of time. Lots of lessons are going to be learned through losses, and you need to respect the fact that this is a gradual process, and if you're patient enough, you're going to eventually develop the skills necessary to thrive as a self-sufficient trader. Myself, when I first started trading about 6 years ago, I started learning about 8 in the morning till about midnight every single day for about 2 years. I was watching webinars. I was also crossing over to the traditional Forex penny stock side. I read tons of books by for example, William J. O'Neill, How to Make Money in the Stock Market, by Precher Frost, the Elliot Wave Theory book, right? The visualization guide on Elliot Wave Theory. I was reading lots of just every book I can get my hands on. Those are just the top 3 books I read very first, right? I was watching tons of videos by, for example, Timothy Sykes. He's He's in the penny stocks and just the traditional markets as well. I bought his course that he had, which was like thousands of dollars. That helped me get very motivated, right? Now it's a little bit dated in my opinion. It's still very good though. I was watching videos from his students, his first millionaire student, Tim Gratani. They really helped me as well. I was watching tons of videos to find motivation, like from, for example, Stephen Duck's there. He's the kid that turned $10,000 to about $1 million in a few months there. So just trying to find your source of inspiration is really important as well. And when you hear enough success stories from these traders, what you'll find is that throughout a lot of their success stories that they share with you, there's also a lot of failures as well, where they learn from their mistakes, right? Personally, myself, I've learned a lot about me, okay? I've learned that I specialize in basically two types of patterns, okay? One pattern is a 5 Elliot wave count that's very clear, that has moved up a very good amount, where I see a higher high on wave 3, or sorry, on wave 5 and 3. So wave 5 has to have a higher high than wave 3, and 2, right? The MACD has to be about to cross over. 3, the RSI on wave 5 must be higher, or sorry, must have a lower high than wave 3. So those are that's one of my main strategies, right? It's a typical impulsive wave for an Elliott wave count that has 5 very differentiable waves that go up. It has a higher high on wave 5 for the price. It has a lower high on the RSI for wave 5, and it has a MACD that's clearly distinguishable. And this could range from a 5-minute time frame to a very high time frame. It doesn't matter what it is, but I specialize in Elliott Wave Theory with MACD crossovers and RSI showing bearish diverging. And the second strategy that I specialize in is catching a falling knife, okay? I just didn't catch it the best this time because I was still sleeping. I was literally in bed, and had I had more time to analyze it, I definitely would have done a lot better. Because this is why the topic of this video is going to be panic selling, okay? Or sorry, buying the panic dip and sticking to strategies that work. So let's get into this, okay? So once again, really take it slow, guys. I was studying for literally 2 years from 8 in the morning till about 12 at night, which is about 16 hours a day, because I understood that it's a very fierce competition. And when I was watching a lot of the really good traders out there, I said to myself, how am I going to beat these guys if they're so much better than me? I need to have some sort of advantage over them, and my advantage was going to be putting in more time than the average people. It says, generally speaking, that if you put in more time than the average person into anything that you do in life, there's a higher chance of you succeeding much more than them, okay? So it's really important when you think about the theories of just succeeding in general. You have to have the grit. You have to put in the work. You have to understand that these losses that you accumulate, these losses are the biggest lessons that you'll absolutely have, okay? I took a lot of losses. Actually, just last month there in September, I think it was September the 28th, September the 30th, I took a $100,000 loss, which I showed to my Discord group. A $100,000 loss there because I was playing a $1 million position, and it was actually going parabolic, right? I think it was on IOTA. Yeah, I could have been on IOTA where it went parabolic, and I was still trying to short it, right? And of course, surely enough, I eventually took a 10% loss. It was so parabolic going to the upside there, right? So a lesson learned from that, that I need to count Elliott waves a lot better, and I need to look for better signs to enter a short position when it comes to basically panic shorting. It's the opposite of panic buying almost, right? Because when you see a panic sell, you're going to see a parabolic drop to the downside. Panic buys with FOMO, because of news, it usually is accompanied by a parabolic up to the upside, and that can be extremely hard to catch. So let's get into this. Let's get into what ended up happening today. And always remember, guys, that one last thing is that these losses, once again, I have to reiterate it, that you take, they're going to be the most vital part of your success in terms of developing what kind of trader you are not, okay? As important as it is to figure out what kind of trader you are, it's also important to find out what kind of trader you are not. So the psychology behind trading is, to me, it's just as important as learning the technical analysis behind trading and what works for you as much as what doesn't work for you. So just to give you an example, okay, I am not a breakout player. The reason why I'm not a breakout player is because I'm very impatient. I'll enter early. Not only that, I take my profit too quickly as well, right? And I'm not really great at personally dealing with breakouts because of being impatient, and I take my profits very, very early. Also, if I were to take my capital and put it into a coin, there's no chance of it actually just breaking out or waiting for a breakout. For example, in a symmetric triangle, you can be waiting for a very, very, very long time for something to actually happen. And when it comes to an ascending triangle, I tend to take my profit very early because I personally am not good at being patient and waiting for it to rally even further on a little dip when it's still going to the upside. That's why I focus on these big spikes of shorting when it drops to the downside when something has gone up too far, or when something has dropped a lot, and I focus on catching that falling knife so I can get a huge uptrend that's going to bounce. So I take advantage of basically the fear and the greed in the market, especially the fear as in people are panic selling, so they're going to end up selling and basically filling up my position to go long when the market has dipped a lot. And then there's the greed when the market has spiked up to really high amounts and people are actually filling up my short positions, which I end up capitalizing on all the time through these 5 Elliot wave patterns that happen, that occur. So another thing that I'm not really good at as well is basically entering a break for even wave 3, which is still a breakout, right? I don't like to play wave 3 longs because I'm just not good at having the patience to buy the dip on a wave 2 dip, or when it breaks above the wave 1 territory, right? So I don't have that type of psychology that's trained and patient enough, because when we find out who we are, we find out a lot about who we are through trading in terms of our patience and how we react to certain situations, okay? So let's just dive into this and talk about the panic buying that's happening here today, okay? Let's get into this. So today, the reason I caught DXDY is because I'm on TradingView, and you can sort it like this, okay? You can sort it. These guys have dropped a lot. They're very, very volatile coins that I recommend to be cautious about, okay? So I sorted it by here, and I saw DXDY on my list somewhere here that ended up becoming a very parabolic drop, just like everything else that ended up becoming a parabolic drop, right? You can see that all these coins are pretty much sharing, except for these three. SHIB is a little bit different. 1 inch is a little bit different as well. AVE is a little bit different as well. You can see these coins all have a big drop, and then they go to the upside, and then they're doing this pattern. You can see every single coin doing the exact same thing right now. See, there's actually no difference whatsoever. So your pick is as good as mine if you're picking something. So you see that ball ended up rallying, breaking above here already. So does this mean that a lot of other coins are going to rally above there as well? Okay, so that's important to understand. So ball actually ends up rallying first. Well, these other coins do the exact same thing as well. So that's important to understand that some coins will break out before others, and some coins will do nothing, and some coins will follow that breakout. So they're all doing the exact same thing. I'm just giving you an example. So let's just go to, for example, DXDY, okay? Because that was the coin that I personally traded. So I'm just going to go to this coin right here that worked out for me. So when this dip happens, the last thing you want to buy on is when the volume is still low, okay? You want to buy somewhere. And by the way, you will never be able to trade a volatile coin if you don't have the second charts. You need to have the 5-second chart, the 1-second chart. These are extremely important time frames for you to have if you would like to be able to buy the dips on here, okay? So for example, you would never want to buy when it's still expanding, okay? So when you're looking at these coins, like on for example, a 5-second chart, you can actually see it coming. You can see these coming because if you take a look at the fanning strategy of the 55 EMA, okay, the fanning strategy of the 55 EMA, it just slightly cannot get above the 200 exponential moving average. So for those that are unfamiliar with the fanning strategy of the 55 EMA, let me explain it to you. So we have 5 EMAs, the 8, the 13, the 55, sorry, 8, 13, 21, 55, and 21, and 200, okay? So 8, 13, 21, 55, 200. Now, it's considered extremely bearish when you see the 200 moving average above all of them, and then it goes from the high to low. So it goes from 200 to 55 to 21 to 13 to 8. So from low to high, it would be 8, 13, 21, 55, 200. If you see it in that order, that means that's very, very, very bearish. If it's the other way around, where you see it bullish, okay, for example, right here, this is a great breakout that you could have caught as well here. Okay, that went up 5%. If you see it, for example, right here, just about to break out, this is called the golden crossover. The golden crossover ends up, okay, I'm just gonna try to play it for you guys, see if it works. I'm going to go to the bar replay, and I'm going to start it right here. Okay, so I started it right there. Okay, now I'm gonna play it. I'm gonna forward it. So do you see? Just look with me right here. So this is not a breakout yet. The golden crossover is when you see the bearish pattern right here, where it goes from low to high. There, 8, 13, 21, 55, 200. You see this bearish pattern start to reverse, and then you see the white line end up going to the bottom, and then instead of going from lowest to highest, it now goes from highest to lowest. So then it'll go from 200 to 55 to 21 to 13 to 8. So you'll see all of these lines reversed, and that's going to be your entry. Okay, watch. So now your entry is not yet, but what you see, you want the 200 and the 55 to cross over. So when the 55 and the 200 cross over, that's go time. Okay, and this strategy is extremely useful after a dip. Let's just give you an example. So this is going right now, drop, not a good time to buy, not good. Not good. We're just going to keep going. Now you see it's supporting above the 55 EMA, right? It's still hovering at the 55 EMA, but the 55 EMA is really, really holding tight, right? It's holding tight. It's below it now. Wow, nice little jump to the upside. That candle should have got your attention. It should get your attention, because every time the bulls try to push it, or the bears try to push it down, the bulls push it back up. Now it's still supporting at the 55. This one should cause concern. Let's see what it keeps doing. So you're looking for an entry for a long position. That's a really good recovery. Do you see that the 55 and the 55, which is the yellow line, and the 200, they're actually getting closer together. They're inching closer together. So the moment that the white one is now underneath all of it, that's your entry for a long. Boom. See? That one really went up there. It should cause a lot of awareness right here. So you see the white and the yellow getting closer together. Do you see how close it's getting? It's getting close. You're starting to see it really, really rally. Wait for the confirmation. It's getting closer together, getting closer, getting closer, getting closer. The next green candle, where the white one is underneath the yellow, is a sign. The volume just picked up there in the 5 second. So that's going to be your entry. The next one, that's green, and it crosses over. That just crossed over, but not volume yet. Not volume yet. This one right here is your entry. Okay. This one's your entry, and now we're gonna talk about our entry here. Okay, we entered right there, and then we're gonna talk about when to take profit. The profit to me is when this one right there hits the yellow line, when the price bounces back up to the yellow line. And the reason for this is because, so this actually went up a pretty decent amount. It went up 0.5%. So you know the volume's picking up. Just keep playing it out. It should go up. It hasn't hit the yellow yet. Hasn't hit the yellow. Still going. See that? It's still going. It's actually being supported by about the 21 EMA. Boom, that was a nice one. It gets even further away from it. See these as an elastic band that snaps when it gets too far. It's an elastic band, and the further the price action gets away from the moving average, the more likely it is to come to the downside, to get back to the 55. Use the 55 EMA as a baseline where it needs to come back to it eventually. The further away it is away from it on the top side, the more bullish it is. The further it is away on the downside, the more bearish it is. But it will always get back there, always. So you see it's still going up. Now people will argue, I can just sell at the top. Why would I wait for it to get to the yellow line, right? When it starts to show bearish signs. Well, there are many false readings where it's going to show you that it's negative, but it's actually, or where it's going to show you that it's going to stop, it's now bearish, but it's actually not bearish and it keeps going. So what this strategy does is it allows you to confirm a downtrend as it gets to the 55 EMA. Okay, you'll see what I mean. Still going. There we go. It's getting close, right? Getting close. It's probably gonna hit it now soon. Getting very, very close to it. See, before it was supported by the orange line. Now it actually broke above the orange, which is the 21 EMA. So now it gets a double top there so far. Oh, it still goes up. Beautiful. See that? So we could have sold it there, which you would have thought it's the top, right? But you didn't. And then you could have sold it close to the yellow line, but it didn't hit the yellow line. So you stay strong and stick to your rule of hitting the yellow. There, right here, right? Now you wait for a close below it. Wait for a close below it. There you go. This is where you sell it, right there. Right there is where you sell it. And the profit that you just made was 3.5%. So this is during extreme volatility. This was 5% in 10 minutes. That's how you're able to catch, catch a rally using this specific strategy. You could have sold it there, but just like here, it could have gone higher, just like over here, right? You could have sold it there, that's fine, but now this is about the same place as there, but it now confirms the downtrend. Does that make sense? Okay, so I wanted to talk about that quickly with you guys. This is the tool called bar replay. Everyone has access to it right there, okay? So the bar replay is a feature that I use a lot. And then after that, it hits there. It hits there. It just keeps going down for a really, really long time, right? A really, really long time. And now you're not really able to trade on the 5-second time frame for here, to be quite honest. Like, you're never going to be able to trade on there because it's incredibly too volatile, right? And it drops just too much. Not only that, the 5-second time frame, it's not accurate enough, okay? It's simply just not accurate enough for you to trade on it, in my opinion, okay? On the 1-second time frame is very, very difficult as well, but I would probably recommend trading this on a 5-second time frame as opposed to a 1, okay? And so, like, just as an example, let's just say we use that same strategy. We use that same strategy to look for a long on the 5-second time frame. Let's just say we started right here. Now, I haven't memorized this yet, right? It's kind of a tough chart to memorize, but let's just use the same strategies, starting at the bar replay right here, okay? Right here. Let's see what happens. Now, sorry, I wanted to cross over one more time. There we go. I want the 200 at the top. Okay, so the 200's at the top now. Okay, 200's at the top. The next time we're gonna buy, like this one here, sure, we could have bought it, but it was a false breakout, right? False breakout, like as soon as it crossed over. But because it wasn't really going up, remember we needed that other criteria of volume and a green candle. Here you wouldn't have bought it because there's no volume and there's no green candle at all. Nothing, right? So you would not have bought it there at all. We're gonna next buy it on the next green candle. Whoops. We're gonna buy the next green candle, and also when there's a crossover. Okay, so we're gonna stick to the same strategies that we used. This way we can be sure that we're being consistent. Okay, so right here, hope you guys know that what I'm teaching you right now is fucking a gold mine. I should charge for this video. So we're going to use the same strategy of when the 55 EMA, the 200 EMA ends up crossing above, okay, the 200 EMA crosses above the yellow, below the yellow. So right now we're seeing high to low from the top. We want to see low, or sorry, we're seeing from the top, we're seeing high, which is 200, then 55, then 21, then 13, then 8. We want to see high to low from the bottom now instead of the top. So from the bottom, we want to see 200, 55, 21, 13, 8. Okay, and it has to cross over. The white one has to cross over with the yellow. Keep going. Tried to get above, but it didn't. Do you notice the separation? The distance between the white and the yellow is increasing. Do you see how it's parabolically dropping right now? This is right here trying to give you a signal that's very bearish, because you can't even get above that 55 EMA, above that 55 EMA, and stay there. This alone should tell you it's not time to long. That major drop right there was kind of a signal to what the fuck, something's gonna happen. Do you see that right there? So the separation, the fact that this right here, this region, if you watch this enough, you can tell. This tried to get closer. See, the yellow tries to get closer to the white, but it doesn't actually get anywhere closer. In fact, it does the opposite. And the word we use is diverging, okay? This converging means it's getting closer. Diverging means that it's getting further. So it's converging, the white and the yellow, but now it's diverging. They're getting further away from each other, okay? So they're getting much further away. There we go. The drop happened huge. And this is now a parabolic drop because the yellow line is starting to move much further away than that. So you should be able to see it almost already coming. You should be able to see this major drop coming. Tries again to get above, does not. So this line now is huge. See here, tries to get closer. This parabolically drops. This one tries to close the distance to converge, but it actually stays the same. Stays the same width, distance between it. So now what you're seeing is, now because of this drop again, you're starting to see the curvature change. The curvature changes even more. So now the distance between these two are even wider. Even wider, wider, even wider now, right? So it's actually getting further and further apart. So there's no reason for you to even want to buy this coin. Right here, it's starting to get interesting because it's trying. It's trying to get closer. Trying to get closer. Trying to get closer, but there's no reason to buy. Boom, it drops again. Tries to get closer. Look. It's coming. But is it gonna come? Nope. Look, nope. Oh, it tries to. That's the first time it tried to touch. It tried to touch that. Okay. So here it almost. Okay. Do you see that false reading? First time it touched. First time it got above. We thought that the yellow and the white were going to converge and cross over, but the false reading tells you that there's no reason to enter along. No reason to enter along. Nothing. Drops again. Gap widens even more. Is it gonna cross? Is it gonna cross? Is it gonna cross? It's coming. It's coming. No. See that? That's how you're reading it. So now it widens. Oh, now this is it right here. Because it tried too many times. Okay, tried too many times. That is now what's happening. Do you see that? Tried too many times to get up, but it fails. So they capitulates. Capitulate refers to the bulls basically giving up. Okay, and then there's just a massive drop. So we see the big volume. I call this the middle finger volume. Basically giving you the fucking middle finger where it gets little, boom! One big one, then a smaller one. I literally call it the middle finger volume. Okay, when you see that middle finger volume, that's scary. So now it's starting to increase again, the gap between the yellow and the white. Okay. You know, I teach all of this, guys, in my Discord group. I give lessons like this all the time in my group. I just wanted to make this one for pretty much everybody because I think we all deserve access to education and knowledge, and it's good to learn from multiple people. You know, don't just stick to learning from one person, right? And I think it's pretty obvious by now that I educate a lot, and I also show a lot of my profits on Twitter, right? And of course, you guys are smart enough to understand that I run a private group and I have courses for sale. So of course, a lot of it is for marketing as well, and I'm being honest about it. But hey, it benefits everybody two ways, right? It costs me more money to run the Discord group than for me to actually trade solo. The subscription price that I get from the people paying $50 a month, it does not make up for the profits I could have made while trading if I didn't run the group. Because I could just be trading with like $250,000 or $200,000 or $1 million every single trade, right? And making way more. For example, for my turkey challenge, I made $350,000 in a very short period of time in 21 days. The only reason it's on hold is because I'm moving back to Canada soon, and I take a lot away from the Discord group, so I want to focus on helping them as well, right? So if you guys are interested in joining my group, give it a shot. There's tons of educational content, right? I also have a course for sale as well. It's probably one of the best courses out there. It goes for 450 American dollars. Just check out www.philakone.com. It's in the link below. And the Discord group is full of tons of information, just to give you guys an idea of it, right? I got a section, it's called short lessons. For example, I got short lessons here, right? That goes from videos to written ones. I'm at lesson number freaking 72 already. There's the long lessons. I'm at lesson number 29 already, and these are like 10-20 minute lessons, right? There's a frequency, like there's general trading advice I can give to people. I haven't updated that in a while, so I got to get back to that. And so there's lots and lots of channels to be going through here. I do giveaways quite often. This is the section where I'm always posting my analysis and my thoughts. Here's my live trading where I document every single trade of mine, not just the quick 1 minute, 2 minute. Here, check out what I made. They're like 10-minute videos, and lots of information. So consider joining it, guys. It's $50 a month. I'm taking lots of members in right now. My girlfriend and I, we both run the group together. So it's pretty cool that we tag team this together. Anyways, I'm not gonna shill it. Just had to get that out there after 30 minutes of teaching you guys, right? So let's just keep going. We want to stick to the same formula where we're gonna buy on a crossover to be safe, to confirm a bull run, right? This strategy almost guarantees after a gigantic dip that you're gonna be able to catch a scalp. Now you're not gonna catch the bottom, but you'll be able to catch a scalp. I use this strategy all the time. Still same width. Always observe the width. Okay, observe the width. It's now getting more, it's diverging, it's moving away from each other. Okay, it's diverging hard. Ooh, diverging harder. This is the biggest divergence we've seen. the volume picks up there. That's kind of like a middle finger as well. Oh wow, nasty, nasty. Look how much it's diverging. You see the gap? You must notice the gap there, okay? The gap here is very indicative that the price is falling so fast. The gap between the close of this candle and the opening of this one, never mind the wick, just the bodies, the gap is generally found in traditional markets overnight, where if there's like major news or something like that, there could be a gap. If there is a good news, there could be a gap in the opening price than the closing price the night before, because the good news will be driving up the price, right? But here in crypto markets, when you see a gap, it generally means that the price is falling so fucking fast or going up so fast that there's a huge discrepancy in terms of liquidity that it's causing this gap, which is signaling right here that something crazy is about to happen. Okay, so make sure that you understand the gap. The first gap is where we saw there, the big one noticeable. So it's dropping more. So the first green candle, but that green candle means nothing, okay? Means nothing at all. So let's just open up MACD as well so we can see. The MACDs, they're diverging so hard as well, okay? Very, very, very hard, it's diverging. So this one here is using, the MACD here is using 13 and 21, okay? I'm gonna try to change this actually. I'm gonna try to change the MACD to 13 and 21 actually, because now the MACD is actually following. I don't know why I never thought of that before. This MACD here is now following the moving averages, okay? Is now following the moving averages of my charts here. So I actually want to try that, okay? It's actually, I don't know why I never did that before, but I'm going to do it now. So now it's dropping more. You see the RSI really low. There's no bullish divergence at all. A bullish divergence is when you're seeing a higher low on the RSI, but you're seeing a lower low in the price. So let's just keep going here to see how we see this. We're just at the bottom here. I need to change this so you folks can see it better here. I like to make my margin a little bit better. The margin on the bottom, I like to make it like 25 even so you can see it better. Okay. The margin you see when I double click here, it resets it. So let's just keep going here. We're seeing the price really drop, huge drop, but there was a drop and then it went up, right? So we covered a tiny bit here, but it's not enough of a reason to enter along yet. We're gonna stick to our strategy. I'm gonna delete this line. I don't know why it's there still. So we're starting to see a little bit of support. We're starting to see a little bit of a tick up for the histogram. We're starting to see this, but we're gonna stick to our strategy, what we talked about earlier. Okay, still diverging hard. Do you see? This is still diverging hard right now, right? Diverging in terms of the white and the yellow being separated. You see a possible crossover coming here. Okay, see a possible crossover coming. So it's trying to cross over, but it didn't. It faked out and it came right back down. Okay. Still very bearish. Still very bearish. Okay. Still super bearish. So do you see this one now is actually positive? The MACD and the histogram is now positive here. Now it breaks back down. See, it goes negative on the MACD. This starts to diverge even more. Okay, it starts to diverge even more. Now it drops to the downside. Drops down a lot. Drops down a lot even more. Ooh, this one here is a really good candle. Okay, that was a good doji candle that formed. And that's a great candle right there where the RSI spiked up. And this is the first time that we actually got a histogram that peaked up like that, where there's a big step in histogram. Okay, so that's interesting. That might have been the bottom or very close to the bottom. still going up. We want to follow our strategy still of the white crossing over to the bottom side. Okay. Keep going at it. We want to follow that strategy. See now do you start to see a lot of, do you see here where it's steady? They're just solid bodies. Here you're starting to see wicks. Every time it goes down, pushes up, down, pushes up, down, pushes up, down, pushes up, down, pushes up. Before, we did not see any wicks really pushing up. Here we saw a wick push up for the first time. Here we saw a really big wick up and down. Here we see a wick up, down, up, 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 but none down. Do you understand that logic? You see none down and only up, which means that the bulls are actually fighting to push it up now. Do you see that? The volume is really increasing as well, slowly. Oops. There we go. Now it's above the 55 EMA for the first time. See, since there, it was never above the 55 EMA. Now it's actually above it. Some people might enter prematurely and they'll just enter on a fanning strategy where after a gigantic downtrend, if you want to catch the falling knife, some of the best ways, in my opinion as well, if you're more aggressive, is to wait. And this is only after a big downtrend. You need to follow those rules. Is that you buy it when the 55 is on the bottom, right? When it crosses over on the bottom. So then it goes from 55, okay? It goes over, see we're seeing 55, 21, 13, and 8. But now, just this section alone, you see the 55, which was at the top, it now goes to the bottom. So now from low to high, you see, from the bottom to the top, you see 55, or so you see 21. I meant to say you see the 21 here in the top, 13 and 8. So from top to bottom, you see 21, 13, and 8. But here you see it flip. You see now from the bottom to the top, you see high to low. You see 21, 13, and then 8, right? So now you're waiting for the 55 to also get below on the bottom. So on the bottom to the top, you're seeing high to low. It's basically the exact same thing as the golden crossover, except the 200 is not there, okay? So then you're buying it pretty much when the 55 crosses it on the green candle with volume, the next one. So this one here was a great candle. That closes, and the next one, which is this one, you buy, right? So you would have bought it right there, let's just say. Just put a line right there for when you bought it, okay? So the 55 crosses to the bottom, right here, and you got a volume, a good green candle there, and a volume. So just keep going to see how this plays out. And your stop would probably be somewhere below here, okay? So just keep going. Almost stopped out, not quite. Ooh, see that? Very close to stopping out. The stop would be, the entry would be a close below the 55 EMA. Okay, so just keep going. So this one here is your stop loss. I'm gonna put this red so you know. This would have been your entry, your green. Just keep going, okay? Ooh, it's trying to break above the 200 now. See that? Wow, it breaks above the 200. Do you see the yellow and the white? They're actually converging now. They're converging and moving closer to each other. Do you see that? It's converging. Falls back below. Now the white line is trying to cross over below the 55. And the 55 is supporting the candles right now, supporting the price. It's not quite getting below there. There, now it gets below there. Closes there for the first time below. Gets back to our entry. Almost gets back to our close, or our stop loss, right? Is it gonna get to our stop loss? Right, we could choose that one, or you could have chose right here as well. Right, a close below it. That would have still been a good 2.5%. But traditionally, you would want to keep it slightly below where you entered, right? That's what I think. Or you could have made it break even. That's up to you, right? But just sticking to that red one still. Let's see what happens. Okay, you gotta hold very, very strong to your strategies that you implement. Where's the crossover? Where's the crossover? Is it coming? Right here. Right here is coming. Boom. This one's good enough, I'd say. Green, crossover, first one, took forever. That was a great crossover. And now I would probably recommend selling it when it hits the 55 EMA again. That's when I would recommend selling it. It really goes up. Really, really, really goes up. Goes up. Sell it to 55 EMA, just like the strategies we've talked about. When it closes below it, okay? When it closes below it, just stay strong. Stay strong. Boom. You would have closed it right over here. 1631 when you see that big one. So your profit now from where you entered is literally 7%. That was a hard 7% you earned, right? Very, very nice job if you stuck to that strategy. So this is how I personally catch a falling knife. I don't catch on the bottom. Like, you know, this is huge. That's 20% of a dip there. But the chances of me fucking catching that on the bottom is like impossible almost, okay? So that's why I'm going to wait for this type of confirmation, because I am not a greedy trader at all. So I just want to show you guys that strategy of riding the 55 EMA on a 5-second chart. Another way you can catch it is basically to catch a big dip is you must be patient and you must wait for one crossover upwards, 2 crossovers down, and then the third crossover up is usually a really good one, but it must have had a gigantic dip to begin with, okay? You must have had a really big dip to begin with. And also the next lower, the RSI must have a lower high, or sorry, a higher low, and the price must be slightly, the body must be slightly lower as well, okay? You must have a slightly lower body. This is a lower body, lower low than that one. Not the lower low in price, but a lower low in the body, because that's how RSI is measured. And then you also get, for example, a higher low on RSI. At the MACD, it has to be a third crossover, not a first. That would have allowed you to enter at a really, really ridiculously amazing price, okay? You would have been able to enter roughly there, and you would have gained about 15% profit. So what I really recommend is that this is how personally I catch a falling knife when there's a 20% drop, okay? I'm not gonna randomly just fucking click on a button and hope that something happens. I look for key factors that allows me to get a signal of a good time to buy, but it requires following it immensely and meticulously for a long period of time. So the first strategy, once again, was using the fanning strategy with golden crossovers on a 5-second. It could be on a 15-second chart as well if it's not as volatile. And we're buying it on the golden crossover, right? Where it could be the white one crossing, okay? If you use the white strategy that I used, okay, the white strategy, you would be buying it here. So if you use the yellow one, the yellow crossover, which is here, where it's on the bottom, right? You're buying it right around here. Actually, where was it? Sorry, right here. You're buying it right. Hold on, where was it? Actually, this one did, right? This one did a little bit, but it wasn't really the best. So if you bought it on the yellow one, that means you could have capitalized here, and then you sold it at the, look, just right here on when it starts to rally again, where the yellow crosses over, you could have bought it right around there, okay? I have to refresh the page, excuse me. Okay, let's just go over those two scenarios actually. Okay, let's do this. Okay, So the first one was buying the yellow right here. And then to stop yourself out, it would have had to basically hit the yellow line again, right? Or break below it. So you would have made yourself a good 4% there. 4%. And then again, where the yellow crosses here and then it crosses over to the downside, you would have made yourself another about right here, 5%. That's a really powerful strategy. Okay. But if you were to just buy it on just the white one, okay, just where the white one crosses over, I realize that we've only been looking at it in this tiny, tiny little section, right? So if you were to buy it where the yellow one crosses over and you sell it where it crosses over again, you would have made about 4 or 5%. If you bought it here on the yellow and then sold it where there's a yellow crossover again, that would have been 5%. And I'm not going to bother going through the other ones, right? And then if you bought it on the white crossover, right, the white crossover, and sold it when it hit the yellow again, that would have been 4%. So of course, taking the white one where it crosses over in the bottom last, that's going to be less of a profit, but more of a confirmation. So I highly urge people to just consider these strategies, but don't use them like it's the only ones that work, right? I think that it takes a very long time to develop a set of strategies that that you can figure out who you are not and what kind of trader you're not. So always take it slow, one step at a time. I had a really good September. October was literally, maybe October was probably 10% of what I did in September. So really slow month, right? Like $30,000-$40,000, just slow to me, I'm sorry to say. But, you know, so some months are going to be busier, some months are going to be slower. As long as we understand that this is a marathon and not a sprint, and it's going to take you a very long time to develop a set of strategies that work specifically for you. Copying someone never works in this market. If you are looking for signals, I'm sorry, but it's just not going to work because they end up impeding your ability to learn. Since you're just copying somebody, you're not focusing on the educational aspect of developing your skills as a self-sufficient trader. And just copying someone, even if they make profit, you're unable to do it successfully because you don't have his skills as well. For example, when I'm laddering, there's no way you're going to be able to copy what I'm doing because you won't even be able to understand most of the stuff I'm doing in terms of why I'm, like, understanding why I'm doing it is much more important than just doing it, because you're not going to get rich quick. This is not going to be something you make a big gain overnight. Like maybe you'll get that one trade once in a while that runs or that shorts, but other than that, just really take it slow. Understand that all these losses that you have, they're a really great point for you to take a step back and just appreciate them and really learn from them so you can develop something into your own to prevent these types of mistakes. So I hope that you've had fun watching this video. I wanted to take an hour out of my day to make this video for you guys because I thought that it was extremely important to address everybody as a public, as a whole, so we can just understand some of the things that a professional trader does. I do consider myself a professional trader simply because I've made a good amount in the market. I trade very successfully every single month with a green win ratio. I do this full time, where I've left my job for my full-time job as a mechanical engineer, where, you know, I went to school and stuff for that, and I studied mathematics as well for 2-3 years, right? So I left my job in that particular professional academic field to pursue this full time. I get to travel the world for a living. My girlfriend also trades with me as well, and she helps me manage this group. So yes, I do consider myself a professional trader, right? I always have room for improvement myself, and I think that's very crucial that we understand there's always room for improvement. Despite you guys seeing me post profit on Twitter, just being 1,000% honest that it's also for marketing, for my Discord group, of course, right? For my courses, which of course, if you guys are interested in it, it only benefits you as well, right? I mean, it benefits both of us mutually, where I put in the time to develop these courses and they're sold at a fraction of the price of what's available in the market. the Discord group, the subscription is there because I'm taking time out of my day, taking a smaller salary because I'm not trading as much to help to run this group, so I can focus on growing this community, helping people get on their feet, sharing what I know as well, right? So those profit videos that you see, of course, it's to grow my Discord group as well, right? Because I can't just spend my entire time posting educational videos. Where am I going to find the time to trade? I need an income as well. So there needs to be a delicate balance for both, in my opinion, right? And that's what this video is for as well, just to help people understand what goes through the mind and the psychology of a trader that's been doing this for 6 years successfully. And I would say I'm doing it pretty, honestly, there's a cocky side of me that's like, fuck, I do this really well, and I know I do it really well. But then there's that other side of me that has zero ego, and it says to you guys looking at you saying this, that the reason why I have this type of success is the truth, which is I work harder than 99% of the people you will ever meet in your life. And I put in so much time and effort, and being a first generation immigrant here as well, right? Where I was born in a refugee camp and my parents sacrificed everything for me. I have a lot of honor. I have a lot of respect. I grew up in one of the poorest countries you can ever know, which was Laos, right? Or that's where my parents are from. I mean, and me being born in a refugee camp and my parents sacrificing everything for me, that's truly where my motivation comes from, right? The money is just a bonus. I knew that the money was going to come as long as I put in the hard work first. So I had to get that motivation, get that inspiration first, get and then get the skills afterward, put in the hard work, right? Get the scars, right? Get the blood, get the sweat, get the tears. And then after that, I knew that the money was going to come, and it did. So I hope that you all find your trading style as well. I hope that this has given you a lot of insight on what could be done during, this is just one example of many examples of what could be done during a very volatile move coming to the downside, right? And a lot of people try to over leverage, okay? They try to over leverage, and I really advise against that, because this is not a way to get rich quick. This is a way of, you need to cut your losses very fast and be extremely conservative by sticking to a set of rules that you trade and nothing else. And then you take your losses very, very quickly, because if you let your losses ride, you will not be able to find success in the market, since you're losing your most precious asset, which is your capital. If you lose your capital, you won't be able to trade. So you must learn how to protect it and preserve it so you can grow it, as I always say, okay? Take those losses very quickly, okay? And then, people, there's so many other things that you can do as well, such as laddering down, laddering down, laddering down. But I chose to purposely avoid talking about that because it was so difficult to catch a specific spot to ladder, since there's not a lot of indication just from parabolic drops and knives falling down of where and when to buy. But if you're using a moving average strategy, I personally find that over the years it has been much, much more successful. So, this drop here was literally a 28% drop there, right? And even if you can catch 7-8% of this, that's 7-8% in a very short period of time. So I hope that this video has helped you in one way or another. I really wanted to talk a lot about the psychology of trading rather than just the technical analysis, because frankly speaking, the technical analysis is only going to get you so far. It's the mental discipline and the drive to keep studying and keep improving that's going to really help you much more over time. So I hope you enjoyed this video. If you are interested in joining me in my Discord group, right, I think that's understood by now. Just give it a shot. Give it a shot for 1 month and see how you like it. It's $50 a month. If you pay for the entire year, you also get you get the courses for free as well, which is worth $450. So consider joining that, guys. Or if you just want the course, hit me up and we'll go from there. Have yourself a great day, and thank you very much for the love, the respect, and for watching this video. I hope it may have helped you in one way or another. Bye now.